Chris, we spoke earlier with Hadley Gamble about some of the macro state of plays with regard to this particular meeting. Can you tell us what exactly the market expectation is at this point, given this meeting that's going to happen at 10 a.m. today?
Well, thank you for inviting me, Dom. Yeah, indeed, the market is clearly expecting some sort of deal. The market is up again this morning. It's been, buying on, covering short positions and rallying upwards, and so there is obviously some expectation of a deal. The reality of the macro condition is that we see at Platts Analytics a need to reduce supply by some 15 to 20 million barrels a day. That's how much demand we've lost, or refining capacity that we've lost in this month and will lose next month as a consequence of the coronavirus. And yet, right now, the talks are about trying to get a deal to reduce 10 million barrels a day. So the question really is that going to be enough? And is the market ultimately going to be disappointed?
So let's talk about whether the market can be disappointed or not. Is the threat of a disappointment the threat of lower oil prices? We've heard RBC's Halima Croft say that we could see prices in the teens for oil if something doesn't get done. Is it enough of a scare for these large producers and even the United States if we see crude oil prices for WTI and Brent both going into those types of levels?
Well, I think the key issue here is right now is the physical market, dated Brent, is trading at record differentials to front month futures ICE contract. And we've got a $10 differential. So even if crude prices start to rise, which they are on the futures market, there is very little buying interest for physical cargo. So it's still getting discounted. So there's a bit of a question in my mind for Saudi Arabia and Russia to say, well, look, we've come a long way in this new strategy, which is for market share, which has driven oil prices down. Should we not stick with this strategy and let the high-cost producers feel the pain and force them to have to reduce their production right now, and therefore make them make the cuts in order to balance the market? Now, clearly, we won't get enough for the sort of 15 to 20 million, and they will have to reduce a little bit. But is it really in their interest to cut and take the lion's share of these reductions? Now, it's clear that the US is negotiating with both parties. They will be using every bit of this carrot and stick that they can, threatening taking away military aid to Saudi Arabia, perhaps offering to relax some of the sanctions on Russia, for example, on Rosneft, who recently transferred its debt on Venezuela to a private bank within Russia. There may be threats of tariffs for imports into the US, and we know a lot of Saudi crude is heading towards the US. So there must be some very careful negotiations going on here in order to encourage both parties to want to make these cuts.
Sure, Chris.
What I would say, sorry, yes.
Yeah, I was just going to say, I wanted to key on something you said. We just have a few moments left here. The U.S. is one of those relatively higher cost producers, the shale producers out here. So what kind of pain can we expect to see if hypothetically, Russia and Saudi Arabia decide that their short-term pain is worth a long-term gain to force U.S. producers out of the market?
Well, right now, the EIA talked about 1.1 million barrels a day of reduction of supply, which I frankly find difficult to see. And I think right now you need economics. And I think Halima Croft, as you mentioned, was right, that really you need oil prices dropping below $20 a barrel to start driving US production down and Canadian production down. At below $20, you start to see maybe 5 million barrels a day of US and Canadian production at risk. And you almost need that to happen. So even with these cuts, even with this optimism in the market, ultimately, unless the US is willing to somehow get a deal with the US producers to cut their production, which I think would be very, very difficult, then you're going to still need prices to drive that action, and therefore prices will still drop low. And we've seen WTI coming under huge pressure, the differential to Brent and TI widening, and that we saw record increases in crude stocks in Cushing yesterday. Cushing stocks likely to be full within 4 weeks of now.